Good evening, ladies and gentlemen. We got some fun stuff. I mean, the amount of tabs that I have open tonight, it's going to be an interesting one, folks, because we got the whole spectrum we're about to go through today. I really want to talk about some comments and just some entertainment value because people always love picking fun of me. So we're going to talk about some stocks like Tesla, of course. We're going to talk about some of like the trend-setting stocks like Nvidia, ASML that just posted earnings. But I really want to kind of shift focus and gears and obviously talk about total return. I actually have an option ETF that I find relatively intriguing. And I want to take it into perspective when it comes to like dividend investing and what it means for somebody that's looking to fast track retirement and if that is the appropriate approach, or should you just look for total return and then perhaps diversifying the dividends when you reach the capital value that you need. I will review the portfolio here as well. Oh my God, we are now below 300K again. Yes, I am not infallible. The stocks did go down finally. We're getting a bit of a correctional period here, but I do want to start by saying one of the most interesting things over the weekend that we've been discussing is how much Toronto, the city I live in, has changed. It is now ranked the worst city in North America for traffic because we were talking about how if you know, Ontario specifically, there's a highway near Toronto that runs from the airport. There's two intersecting highways. One's called 427, and then there's a street called Yonge Street, and that is now the busiest highway in North America, which kind of blew my mind because I always think like LA, New York. And we've just been having these debates because I know people that want to leave the city because it's becoming so congested and all this stuff. But at the same time, I feel like we're finally heading toward that direction of New York. And I'm still trying to find ways to love this city. We don't go downtown as often, but it's crazy that I live here now. And they're just talking about these unbelievable growth rates to the point where they're cutting off. They're not going to allow international students, I think, for a year or two now because they're taking up too much of the housing demand. There are a lot of reasons that's driving this, but I think it's beautiful to live in such a fast growing, hyper, city where everybody wants to live. It feels kind of interesting. And it's just neat to see Toronto go through this massive shift and change. And this is just like segue stuff. I just wanted to have a brief interlude of just weird, random things as cities change and, things evolve over time, which brings us to the Tesla discussion, doesn't it? Was the flood pretty bad there? Yeah. So I don't live right downtown. We did have some flooding in this area. I'm in a condo, so it didn't really affect much at all for where we were. But people down the road from us, family, they got some pretty bad basement flooding. But the funny thing about that is if you guys know downtown Toronto, let me just pull this up real quick because I don't know if you guys saw the Toronto floods. So basically, Toronto wasn't built for the rainwater that we get. And what ended up happening here is when we get these really bad storms, we get the overflow from our sewage systems. It's disgusting. It's literally just shit water. It's a horrible, disgusting thing to deal with. And this is all because there's a river called the Don River, which actually I think there's a photo of the Don River right there. You look off to the right there and you see that river right there. This river, this is supposed to handle the water. And it wasn't designed for it. So what they're doing right now is most people are unaware. I think by 2026 or 7, they're going to actually expand another part of the river. So this doesn't happen anymore. But yeah, it's really odd for those that live in the city and got to experience a subway filled with shit and a road filled with shit. And you couldn't go anywhere without walking in human waste. Beautiful city, though. Beautiful city. Lots of culture. Lots of culture. Just don't come when it's raining. It's kind of like our hurricane season. Instead of getting bad winds and all this stuff, we get a bit of rain and you just got to deal with some sewage. But back on topic here. I do want to point out, what's been going on with Tesla and just some of my thoughts surrounding this, was an $800 billion company before the mild correction where we don't know what's going, but earnings will obviously kind of conclude what happens to the stock that I sold out of. And I just want to talk about kind of these hype 10x kind of stocks and like how you kind of have to approach them and why sometimes it's just easier to wait for the most part. And I just really want to point out that the speculation, because we're going to compare this to a ton of other stocks, and I think Tesla has the most opportunity to explode in the future. But we're talking about a company right now that is declining in revenue. They need. We're speculating that once we get to the right half of this chart in the next coming quarters, probably the next year or two, that this is going to go down and it's going to flip back to the upside. I mean, that's what everyone's anticipating. That's how Tesla can command an $800 billion market cap when the revenue is actually declining, right? I mean, we're talking about a company that's worth as much as Toyota, GM, Volkswagen, Ford, Uber, Lyft, and Starbucks combined, but makes less revenue than GM. So for the same market cap value, you could own all of those companies. And again, that's not necessarily a bad thing, but there's so much speculation, there's so much hype into what's going to happen in the future that we just don't know, right? So when valuations start to kind of get nutty, because people kept going on about how, like, what I think is funny is for someone that was pounding the table criticizing all those who only see Tesla as a car company, your thesis was super short-lived. I see the thinking, but not sure your thesis was as rock solid as you made it out to be. So I still believe self-driving, it's going to be a huge thing. I just don't know how you can justify the value when it's not creating revenue really today, any substantial revenue. And even if you do the math on the current cars on the road and you try and run some value on how much they can produce today, if they could, and it's still speculative if that's not priced into Tesla stock already, right? It's a hype company. So I'm just putting it out there that I thought in my prediction that the stock was not going to go up, that it was going to go down. Yet we're sitting in a time period where revenues, nothing has changed. Literally nothing has changed. But it's just going up just because, for no other reason, just because. So I was hoping that by maybe 2025, somewhere mid there, we'll start seeing the turnaround in revenue, the new vehicles getting launched, self-driving actually getting introduced in some substantial way. And I think that's still coming, but I can't price that in as though it's happened right now, right? So I'm willing to comfortably sit and wait. This guy's funny. He says, thank you. I bet with a friend $50 that at the beginning of the year, your two long-term Google and Tesla stock will be all sold before 2025. I'm bipolar, man. I don't know what to tell you. When I see like a big chunk of change in front of me and I'm just like, there's a lot of speculative risk in these stocks for certain reasons, the values they trade at, and especially in this market when there's so much hype built up. Let me remind you that I'm like the king of hype stocks, right? Like I'm a guy that managed to capture this little growth phase, other than I missed Nvidia, which killed me, but still, I captured some of this growth phase, which was crazy. And if I held on to it long term, which, let's be real, I could have held this for a few more extra years and I would have imploded like 99% of my value. And this is a stock, like all growth stocks, they go through this phase where we're speculating on how big the industry is going to be. And it just wasn't that big for MJ companies. It started off amazing. And this is what the stock charts do. They follow these really wicked growth prices because they price future estimations, but nobody knows that future is actually going to be true or not. It's a calculated risk. You're calculating the odds of return. It's better than a casino if you know what you're talking about, right? Like Northland Power, one of the first stocks, the first stock I ever bought next to Canopy Growth Corp. And this one has wiped out almost all the capital value that I sold out somewhere up here, right? I could say the same with MindMed. I pumped this thing up. We sold it out. Not that I pumped and dumped it. I mean, there was a lot of people pushing speculative stocks during this era, right? And if you held it, I mean, I literally would have lost 80% of the gains that I had. Again, I'm not saying this is Tesla. You look at something like Momentous. This was a stock that I bought up here and I sold for 50% loss somewhere down here. And even though I took a 50% loss, it saved me a 99% loss. I'm just saying the future is so unknown. The only reason I'm talking about this company is because we got a lawsuit paper, and I didn't go through the effort of litigation, but you could just fill out some paperwork and try and get some money back because like they're getting sued 9 ways to hell. Super interesting stuff. And I feel like Starbucks is kind of going through that Tesla phase right now in its own way. I mean, it's not as much of a growth beast as, people might look to more software oriented stocks. But I mean, for the last decade, I mean, this thing was on another tear. It offered outsized returns up till recently. And now people aren't sure of the business model, right? People aren't sure, where this thing's going because again, the revenue, just like Tesla's, has been going into the negative. Yet there's people taking interest, right? There's people speculating just like they do on Tesla, other than Starbucks isn't trading at such a high value as Tesla. But, there's institutional, like Elliott, I don't know who this investor, Elliott, builds sizable stake in Starbucks. Like there's people that see this as some value here. We've talked about Starbucks. I'm not a big fan of buying overpriced coffee, but it doesn't mean it's not a good business. Doesn't mean people aren't still going there. Still produces pretty good revenue. So do you think there's a future for this? Because if you do, and that revenue starts to come back, this stock will recover pretty dramatically and you can get an outsized return. It's just a matter of, do you know what tomorrow brings? And how sure of you that tomorrow isn't going to have any kind of economic or market risk to it, right? I mean, we're talking about, it's like apples to oranges here because these industries are so different, probably like blueberries to oranges or something. Let's be real. But I just find it such an interesting conversation, right? Because when we're all sitting here and I listen to a lot of different investors, and to be honest, what I want to try and be better at is trend investing. And when there's material shifts happening, to not get stuttered by my own ignorance and just recognize what's happening. And Nvidia, I think, is the best example of this, because I just can't understand chips. And that led to my own ignorance of just looking at a company like this that got that explosive revenue growth, where we knew that revenue growth was going to be absurd. They guided it every quarter. They offered, and same with, like, if you want to gauge the sector, just look at TSMC, right? They post monthly revenue. So when their earnings came out, people were like, oh my God, 40% revenue growth. And it's just like, we knew that. They post their revenue numbers every month. Like, they post their percentage gains every month. It's like, you knew that the entire sector was still lifting. Like, there were so many blind signals out there that was like, you could have just bought this and just, made a quick 50, 100% gain and got out. Similar to what I just did to Tesla, right? And it's just like, my own ignorance held me back from this, but I don't trust it now, right? Like, I've been bearish on this sector for so long, and obviously it's been to my detriment, but I hold exposure. I'm comfortable having Nvidia in the S&P. Like, it's a big position in the S&P. That's as much as exposure as I need. And, if ASML and these other companies work their way up the list, then so be it. I can own them passively, right? But still, it sucks when you see those kind of gains and you realize in retrospect, like, how many obvious signs there were that these are tradable stocks, swing tradable stocks. I don't day trade. I don't know what's happening on a day-to-day, but you got to recognize that when you see these monumental shifts in these trends, they last a while. Tesla's 2019 run lasted a while. But what ends up happening is economic circumstances will eventually change. Revenues will start to sputter again. And because these stocks trade at values of that future expected growth to continue, you're going to get a correctional period or crash. Because again, for a company like Nvidia to drop 50% isn't unusual. The stock does it fairly regularly. So when I'm telling people about these stocks and all this stuff going on, it's just, you got to constantly be reminded that when you look out 5 years from now, the stock, if it's overvalued today, materially could not gain anything for 5 years. That's where Tesla is right now. From 2020 to 2025, Tesla's virtually going to do nothing. I mean, because it got overhyped, right? I mean, this is just what happens. I mean, you look at this, right? Here we are in 2020 and the stock's virtually done nothing. We're going to talk about a 5-10 year period for it to catch up for the value that everyone baked into it. And I feel like that's the period we're in. We have to wait for that monumental shift to happen with a new vehicle, with self-driving. And if that trend takes off and that growth comes back, you can buy into it and ride that growth for quite a period of time. But for now, again, when you're trading at an $800 billion market cap, where I thought you were going to be going down to a $300 billion market cap, I'm just not going to feel comfortable holding the position here when I'm still more confident that it should go down. Now I might be wrong. Earnings are going to tell next week. If I'm wrong and it shoots up, so be it. We'll find out, won't we? We're all playing that speculative game. So some fun comments here. Could you do a video on ASML and the pullback? I don't think I really have to do a video on this. ASML is crushing it right now. I actually have quite an affection for this company, because I have deep dived into them on a pretty extensive level. And when you understand lithography machines and just how complex they are and how few companies have the capability of making these, they sell for, hundreds of millions of dollars. I mean, the expensive ones, you're getting up to $1 billion now. And I wouldn't be surprised if Meta and Apple and these companies, are buying them out their own. I mean, I never really looked into, because I think Apple's partnered with a company to build their M1s, but, companies, they need these machines. They're beautiful, right? So this company's gross profit is insane. I mean, they went from 6 billion to 14 billion just within, 3-year period. They over doubled their revenues. They're on an amazing trajectory. I just don't know how long it lasts. It's just, if these stocks drop enough, they're a buy 100%. They're correcting on news that isn't going to materially impact, their bottom line that severely yet, if at all, for that matter of fact. We just don't know, because they're just political rhetoric right now that are just saying, hey, how much of this should we sell to China, blah, 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 blah. When most of these machines are being sold to North American companies anyways, it's not that material of a risk, in my opinion. If the stock corrects enough and it keeps doing what it's doing, fuck yeah, it's, it might not be the worst buying opportunity. So am I looking at any individual positions though? Particularly right now, the same stocks. I hold a few small caps. We talked about Adara, but they're insignificant at scale to the size of the entire portfolio. But when it comes to me looking at a stock, I'd scale like Tesla again. I don't know. We'll see. I took all that Tesla money and dumped it into some ETFs, and we'll take a look at how those ETFs kind of work within the portfolio. But we'll take a look at a few comments. Man, give up. I give up. I was holding mostly big 5 banks and a few other dividend players. I sold it all and bought indexes and never looked back. See, this is the conclusion that I feel what most people will end up coming to. When I read these things, I'm always kind of blown away, because I feel like you end up on one of two paths. You look at what is going on with total returns for the vast majority of people that are pulling off these 5 and 10x returns in stocks, and you get so frustrated with the stocks that you've picked because they haven't held up to the same standard as what other people are making. And then eventually you come to that conclusion after you've failed long enough, which it takes a while. Like, I mean, I put I put rules around my investing because I understood the risk I was taking. And I said, look, like, if I underperform consistently for a 5-year period, I'm done. Like, my money's just going to go into indexes, because if you can't get an outperformance in a decade bull run, you're not doing something right, and investing the way you're doing it is wrong. So you need to materially understand what you're doing and make that shift. And the problem is like, I watch a lot of people right now, like PPC Ian, for example, and I feel like there's cults, right? Like, you have your Tesla cult fans, your Palantir cult fans, your Dividend cult fans. I am just a general dude playing the field, right? Like, I am so adverse to just dividend income, just, growth stocks, penny stocks. I've made money on all of it. And I've just come to the realization that there isn't a one size fits all shoe, and total return at the end of the day is what's going to appeal to your quickest path to retirement. So when I see somebody like PPC Ian, and I love the guy, I still I watch his videos all the time. I love dividends. I love the whole dividend community. I just find it interesting that these people are trying to get to a path of retirement, and they're like fighting it almost. They're just taking a tougher path, because he recommends a stock, and he's talking about, well, not that he recommends it, they're just his own personal opinions, right, on Divo. And Divo is funny because this is probably one of the very few, and I've told you guys, there's only like a couple option ETFs that I looked at that are actually worth buying. Because they give you the best of both worlds. You get the higher premium income on stocks that don't yield as high, and you get a capital return. There are very, very few option ETFs that look like this. But again, when you look at the performance compared to the S&P 500, it's just not the same, right? Like, I love looking at just total return and comparables. This is not a good chart because I don't think Divo's chart goes, how far does Divo's chart actually go back? If we take a look at this here, Divo's chart only goes back to like 2017, 2016. So when you take a 2016 timeframe, it's probably not going to be, as comparable, because, the S&P and a lot of stocks have really outperformed this stuff. But I love just taking a look at, say, versus VOL versus SCHD and Divo. But within that time period from 2017, like, you almost got the same returns that SCHD offered. And Divo offers you exposure to some pretty good stocks. I mean, Apple's in there. There's some pretty big tech companies they're running, options against. And I'm like, wow, like, this is what I want to see. When people are talking about dividends or options, I'm like, show me a total return. If that total return can keep up with SCHD or do better, or keep up with the S&P, then yeah, I don't see a problem with it. But the problem is, people sit here and bitch at me, the total return doesn't matter. I'm just focused on dividend income. Oh, dividend income is only the thing that matters. So long as my dividend income's going up, who cares if the stocks are going down? It's like, okay, well, then you might have been the guy that bought Pfizer at the top. You might have had a bad run and you picked Pfizer and 3M and a bunch of stocks that looked great 5-10 years ago that are abysmal today. And I just, I always kind of come back to that conclusion that, you kind of got to pay attention to what you're doing here and understand that total return matters more than you just collecting a higher yield. Because again, like, I just picture so many stocks that offer great yields that are just abysmal now. And you just got to imagine some guy sitting there thinking, oh, that 5% still paying out. And I'm just like, really? I'm like, you just held the S&P or the Qs, you sold it within a year, and then bought dividend stocks, my yield would be like way higher than yours, and I wouldn't have capitalized on a massive loss. It kind of looks at my parents' retirement portfolio and think the same thing. Like, even in their retirement, I don't want them to purely own dividend stocks. I still think it's a fallacy that leads to, just ask any investor, ask any day trader, dividend investor, Jeremy's of the world, Meet Kevin's of the world, like, show me your total return. How did you get that total return? Like, how long have you been doing it for? Like, are you even respectable, right? Nike may take over year to swing trade law. Yeah, we talked about Nike a bit before, but incomparable to, like, my portfolio is super boring. Like, my portfolio is not going to outperform the way it sits today. It might, like, the only thing I'm gambling on right now is that dividend stocks have underperformed because of the interest rates. And I'm very confident, like, with a high degree of certainty, that interest rates are going to materially get cut in half within the next couple of years. There's just no way in hell interest rates are going to stay up where they are. And when they start cutting them, because especially if Donald Trump gets elected, I guarantee you he's going to be lobbying and knocking on Jerome Powell's door like there's no tomorrow to cut interest rates. And just like every history lesson has ever taught, interest rates inevitably come down, and they inevitably always keep coming down because it stimulates the economy, As long as inflation's not out of control, we can manage it. We did for a decade at record low interest rates, right? So the stocks that are underperforming right now in a lot of these dividend ETFs are going to come back, and they're going to come back with quite a vengeance when we get, a few quarters of revenues that start to increase at a material higher rate. Like, I mean, we could see revenues increase higher than 10% at some points because a lot of these companies saw their high interest or their loans, their, credit facilities on their, corporate debt or whatever go from maybe as low as 1%, maybe because these companies get special credit, right? So they were getting like the lowest rates at probably 1.5%. And they saw that shit shoot up all the way to like 6, 8. Like, I mean, they saw, like I said, if that materially shifts the other way, it's going to be a madhouse for some of these companies. And I still think that's going to happen in 2 years. So I like holding the dividend stocks for that reason. But it's also why I go out of my way to still buy and look at trends and buy things like Tesla and Google. And, if my opinion may change over time on that, but I need those stocks to continue to outperform, or this portfolio will more than likely not if technology keeps going the way it's going. So the positions as it stands today, though, and I'm very happy with this. Like, this is the kind of retirement portfolio I'd be happy with, to some extent. It might be missing a few things, but we got Microsoft here at 4%, Apple at 3.5%, Nvidia at 3.4%. So like Nvidia is one of the largest positions in my portfolio right now. I mean, got Amazon at 2%. You can see Royal Bank in here because I kind of loaded up on VDY. So Royal Bank's making its way on my top 10 list. Meta's in here, Alphabet, heck, even Home Depot's in my top 10 list because of the exposure it has to SCHD. Like, when I go through this, I'm very happy. Like, this portfolio makes me super satisfied. I don't feel like I'm overly sector exposed. There's no one sector that makes up more than 20% of the portfolio. It's fairly even spread between, with information technology, financials making up the two biggest percentages, and then healthcare in third, energy in fourth. This is a very boring portfolio, but it does well. All right. I sold Tesla. Tech stocks correct. These stocks won't correct as heavy. If anything, they've been going up. If we continue to see a secular shift, who knows? But then this guy asks me, great video from the start to finish. If you have $30,000 starting cash to invest, how would you allocate it in different sectors? In my position today, not as financial advice, and this comes from an opinion of somebody that has built up between him and his fiance like $1 million worth of net worth. I haven't done the math and I haven't celebrated. Ooh, $1 million. Ooh, it's like, it doesn't feel like that materially matters at this point. It's just a matter of keeping the fundamentals of your habits in place. But realistically, I would just throw it at an S&P index and go make another 30 grand. Like, I always feel bad at this level of the game because, for those of you that have been around for a decade doing this, I remember materially when like $5,000 or $10,000 was my whole portfolio. And I was like, oh my God, like, it's crazy. Now it's like, I had over 30 grand just sitting in Tesla, and I sold that. And within a day I had it in the S&P, SCHD, and I just threw most of it into VDY, just to build that position up. It's just funny. Like, you get too caught up on the small numbers and you should just be focusing on your income. Most people, I think, fixate too much on the markets and the movements, and they end up picking dumb speculative things because they listen to YouTubers like me. They listen to the Palantir pumpers. I'm a Tesla pumper by all means. Like, I pumped a lot of stocks that if you held through like I didn't, you got crushed. So I think for the vast majority of it, take your 30 grand, throw it in an S&P index, go make more money in cost average, because in 5 years, you should have way more than 30 grand invested if you materially, I would hope. How do you become, let me take through a few more things here, and then we'll answer some of your comments and your questions here. Taking a look too at the earnings that are coming up, I'm very fixated on a few stocks for this obviously Google, Tesla are going to be pretty pivotal. I am excited to actually watch Verizon. Like I said, I like the boring stocks because, again, they sit in SCHD, and a lot of these stocks have materially started shifting, and it's going to be an interesting time to see if they hold up. And if that material shift continues to go out of tech into some of these dividend-oriented stocks, because we're seeing somewhat of a secular rotation. And like I said, we also have a catalyst coming up when it comes to money market funds, because eventually people aren't going to want money market funds. And if tech truly is overvalued today, which to some extent it is, I mean, there's no doubt at this point that tech is somewhat overvalued when, Meta or Microsoft's, well, it was in the 40s. I think it dipped just below the 40s recently, didn't it? But I mean, when these companies are trading at historically high PEs and the revenue isn't at a historically high level, it's a little absurd to some extent. So it'll be really neat to see next week if through the tech earnings, if this trend continues or if these tech stocks really continue to hold up. Yeah, it's just going to be fascinating. We're just in such a weird phase right now for earnings. So I'd love to know what you guys think, though. You think tech's going to sell off? Do you think we're going to see somewhat of a material shift here? I don't know. I'm very excited for it, though. So again, I'm going to be keeping my eyes on the dividend stocks just to see what they post for earnings and where they go from there. And then we'll take a look at tech. Tech for Tuesday will be a huge defining factor if Tesla can hold up, if Google can. I think Google's earnings are going to be great. I mean, there's no indicator that the market has gotten any worse. Like, things have materially continued to get better. So I think it'll be a good earnings period. I don't see why it wouldn't be. Coca-Cola should be interesting. You got IBM, AT&T's posting. Waste Management's always exciting. 3M, nobody cares about anymore. That one died. Honeywell, AbbVie. Yeah, there's a lot going on. I mean, it's going to be an exciting week. These are the weeks that I live for, baby. I don't play half this shit, but it is the most entertaining time to be alive if you are an investor. It's just watching earnings. I have a rule of thumb. I usually will not trade stocks the week up to earnings or until after earnings. You just don't do it, because good earnings, I mean, stocks can run into good earnings and still drop. I hate buying around earnings season. It is the sketchiest time. Would you ever buy Visa? Visa's a great company, man. I abbreviated this with American Express earnings. I mean, let's take a quick look at Visa stock. Just because these companies just have undisputed moats. I think American Express was a bit cheaper, but I don't know what these companies do for write-downs. Can't trust these PEs all the time, because I imagine some of these companies have some depreciation and amortization costs that kind of dilute their price to earnings. But again, we're talking about a company here that from 2020 went from fucking 21 billion to 32 billion just within 3 years. Look at their friggin' gross profit here, from 17 billion to 26 billion. How disgusting that is. Oof, man. These companies, realistically, I mean, everyone thought crypto was going to disrupt these. I remember when Chamath Palihapitiya was saying short in like Visa and MasterCard because crypto is going to start replacing the railways for this stuff. And it could happen. I mean, it is still a risk. Crypto can make payment gateways and stuff cheaper and more efficient, but you got to recognize, man, these things are fucking unbelievable. Every time I look at them, plus they also have that perfect formula too. Like, if you go into their balance sheet, most of these companies right now, not only do they have this wicked, just absurd growth, but they're also buying their shares back. And that is just that is like the perfect formula, in my opinion. You got revenue growing, you have gross profit going up. So you got good free cash flow. That free cash flow is being paid out in a very reasonable dividend, not an absurd dividend, but for a payout ratio reasonably. And then you take the rest of that cash and you buy back your shares. Companies that are able to do this will make you fucking rich. Apple does it. Even though Apple's revenue is not growing up, how is their EPS going up? Well, they still cash flow an absurd amount of money, and they buy their shares back to make their earnings per share look better. So even if a company has crappy revenue growth, they can still increase their earnings per share just by buying their own stock back. I mean, like, this is why I always find it funny when people look at companies like Palantir, these other stocks. You make a higher rate of return because there's more risk associated, because they do dilution. They need to do a lot of things to keep revenue growth up. There's a lot more risk for that return, but you have to recognize that the growth you get out of companies like this, the return you get for the little risk that you're taking, is still insane. This is kind of like that math game again, right? When you're talking about future calculated risk, I mean, this company's 98% held by institutions, so there's hardly any volatility. Their payout ratio is 21.7%. These are like the examples of stocks that you should be looking at buying. If you are buying individual stocks, you have, an interest in this stuff. I mean, these are fascinating. These are companies that I live for, man. When I look at balance sheets, like this is what you should be. This is what you should be excited for. PayPal buy their shares back, but they stay flat. I'm curious about their next earnings. That is because PayPal does not have a lot of growth. Unfortunately, PayPal doesn't have the perfect formula. Let's just take a look at macro here real quick. So that's a problem, right? It doesn't matter that you're buying your shares back. And you got to ask yourself, how much shares are they buying back, and is it a material, and like, is it enough to make a material difference? I mean, they're growing in single digits, right? How fast is Visa growing? Visa revenue growth. It's got to be a lot crazier than that. Like, Visa's got to be on fire, man. Let's take a quick look here. Oh, sorry. I need revenue on macro. I'm kind of curious. Yeah, PayPal just got too expensive, right? Yeah, I mean, look at. Oh, actually, no. Maybe I'm wrong. If we take a look here, like, Visa's revenue actually slowed down a lot. I mean, they're down into the 9 or 8% range, but they're also generating $34 billion in revenue. Actually, you know what? Holy shit. I'm kind of mind blown right now. You put me in my place, brother. You put me in my place. Look at this. I didn't realize that PayPal almost has the exact same revenue that Visa does. That is fascinating. I am perplexed by this. You got me interested in PayPal all of a sudden here. Yeah, I always thought PayPal was just kind of a slowing breed of a stock here. Didn't have a lot of growth ahead of it, but kind of think of it. What is the valuation difference here? Yeah, PayPal does seem a lot cheaper than Visa. Interesting. This might not be the worst idea for a turnaround play. They're buying their shares back. They're not doing terrible. I'd have to do a comparable here. You'll have to let me know. Actually, it's very interesting. Those are two very interesting stocks to compare because Visa is a lot more expensive than PayPal. And PayPal still has very similar growth and comparable. I wonder what the guidance is. I'd have to look and see what some of the guidance is and what kind of expectations are. PayPal has less of a moat, though, for sure. Yeah, I think that is some of the questionability, right? Because PayPal, I mean, you're competing with Cash App, Apple Pay. Everyone and their grandmother now has some version of online payments. So, who knows? Time will tell. If you guys are right, though, and maybe it doesn't, deteriorate beyond, the high single-digit revenue growth rates, it could be a good swing trade here. I guess the mode is what people are questioning. What about Block and Square stock? Yeah, Block, man. I don't look at these as often. Square, they haven't done too well, man. They've been kind of obliterated along with PayPal, right? I mean, this one hasn't offered a single return for the last several years. I don't know. I don't play around with those too much. Not really my interest, but they are trading down. They kind of remind me like Cathie Wood stocks, Cathie Wood is a good example of how is ARK doing anyways? What are the ARK ETFs doing these days? I always still have a fixation. The only thing I think ARK has an issue with is their system at which they sell stocks, because everyone's like, why do they sell Tesla like right when it started to pump up? And that's because as Tesla goes up, they sell it. And as Tesla goes down, they buy it. They have some weird system. I don't really like it that much, but I'm also an idiot that just buys the stock and then immediately sells all of it. So am I any better? Probably not. But, I prefer the passively weighted system, and we'll just let the market caps decide who's better. Anyhow, Trump will pump it up. Up as fractional banking does not work. Crypto is still in its infancy stage. I agree. And that's, again, a good example of really pivotal technology that I think has an incredible future that is going to revolutionize video games, the way we buy music and art. And however, we got too ahead of ourselves, didn't we, folks? And what happened? Nobody even talks about crypto as much as they used to when it comes to all that cool stuff, because it takes time. So you got to be careful, man. You got to be careful. 22-year-old with 50K in VFE at 130 average. Holy shit. Do you think I should sell or just hold it through dips? Are you kidding me? 22, you got 50K in VFE. Can we just run some math here? Can I just show you how fucking awesome that is? Oh my God. Compound calculator, man. I don't even think you really have to buy a whole lot of stocks. 50K at 22. Shit, man, that's going to go a long way. So let's say you make it to 50. You got 30 years. Let's say you want to retire 10 years earlier. You got 50K in principal, and you're probably going to get an average of a 10% return. Let's say you don't even put money back into that right now. Let me just run the math here. Let me zoom in so you guys can understand how crazy compound is. I'm in my 30s, so I can't appreciate compound returns like I used to, because I definitely took advantage of it in my 20s, and fuck, did it pay off. So you're on a better path than I am. Fuck you. I think at 22, I was still like 20 grand in debt, or at least I was just close to paying it off. Jesus, man. So let's just take a look. Let's say you got 30 years, right? You're going to retire somewhere in your 50s. You get a 10% return on that 50 grand. You're going to have $872,000 if you don't touch it for 30 years. Now, let's just say you're crazy and you end up putting an extra 500 away a month, and you cut that down to 20 years over 10%. You're still going to make the same amount of money. So, I mean, you could be a millionaire realistically within 10 or 20 years if you just put 500 to 1,000 away a month in 20 years. This is what I always love about, how to fast track retirement. I mean, it's kind of crazy realistically. So if you put 1,000 away a month over 20 years with a 50 grand starting, you got $1 million, right? Like, man, that happens quick. And we said, like, in 10 years, let's say yours is, crazy as I am, and you're like throwing crazy money at this. And like, maybe you're putting 2,000 away a month, right? You're putting 24K away. I mean, in 10 years, you could have half. And this is basically what happened to me. But I didn't start with as much money as you. You have an easier start than I do. You lucky bastard. You're going to do exceptionally well, man. Good job. But don't sell it. Fuck, hold it. Ride it. If it drops by more, baby, in 10 years, you could be laughing. You can be laughing, bud. Don't worry what others are doing. Do what works best for you. 100% agree. Like I said, you sold Starbucks back in 2022 at the peak. Congratulations, man. Congratulations. That's super awesome. I've been buying Starbucks for the longest. Golden opportunities under 80. Yeah, this is what I love, right? Like, just because I don't like a Starbucks or understand it that well, I look at it and I recognize it that it could be a very good buying opportunity down here. It's just like it just depends on what spectrum you're on. Because I always kind of get caught in that conclusion that somebody had to be buying the top, and that guy doesn't want anything to do with it anymore, right? And I always use like Pfizer as an example of that, because like I always feel bad for these companies where they're great companies. They have incredible moats. Well, if they did, I mean, Pfizer doesn't have the best moats because its drugs cycle through too much. You might want like a Johnson and Johnson, but I mean, if you bought the peaks of this, I mean, you haven't seen a return realistically since 1998. I'm always worried that that's what stocks become over time. I mean, you bought Pfizer and you thought it was the greatest company through the 90s. You bought this sucker and you got all these people up here and they're like, it's going to be around forever. And it is around forever, but you didn't make any money except for a dividend. So just be careful, man. Like I said, when you pick these individual stocks, just understand this is the kind of market risk that you're taking. Any advice about semiconductors? We just talked about those. Global warming. Oh my goodness, what did I miss out on here? Some of you guys, I don't. Global warming's got a lot to do with a lot of things. This is going to be probably the worst thing I'll ever say, but I believe in global warming, but I'm also, you got to understand that like evolution and human society to get to where it had to get to, like literally had to cause that. And I'm just super glad. I'm not glad for the next generations to come, but I'm super glad that we are born in a generation that isn't too far off from our parents. We're stuck in between, like, our parents had the best generation and the highest living standard. Our living standard has gone down pretty dramatically, but it is still substantially easier to get rich today than it has been through a lot of history. But you give it another 100 years or maybe a good 200 years from now, and people are going to have to answer for a lot of crazy shit. We're going to have to answer for global warming. We're probably going to have to answer what happens if you can extend life expectancy by another 50 or 100 years. Like, there's so much shit. AI, like why run wars? Like, I mean, what is Palantir really doing? Does any of us know? I mean, every war is eventually going to be fought through, an algorithm that is just, shitting out the best possible outcomes. All political debates and everything will eventually be answered through something smarter than us. Too many things that got to be answered. Thoughts on BCE? Before I go on some crazy metaphorical rant about the future technology and the hard answers of global warming and all the shit that we fucked up to someone else is going to have to fix, that I'm glad I'm not going to have to live long enough to see. I don't even want to live long enough to see someone live forever. Fuck that. Do you really want to live that long? Could you imagine if you could live forever? They actually get to that point. Just think about it. Heaven or hell could be a real thing. I'm like, it literally becomes biblical. Like, literally the Bible is a thing now. It's like you could literally live in an infinite heaven or hell if I can extend your life expectancy, make you like a fucking, God knows, something that lives forever, like a tortoise or something. Elon will save us potentially, but I doubt it. The Elon's existential crisis is very similar to mine in the aspect of, the only way you can deal with it is by concluding that I would rather live to see it than not be around to see it at all. Because when you look far enough out and we stay on the same trajectory life does not get better. It gets a lot more complicated and it doesn't function. Society, like, I just can't envision the world. It doesn't make sense. And we're going to see it probably by the end of our lifetime. I don't want to live long enough to have to deal with it otherwise. But think about it. If everything all of a sudden becomes automated, how does human society function? Is it fucking Wall-E or something? Like, that's just the reality we're heading toward, though. It's not like when we made computers and everyone's like, oh, they're going to lose their jobs. But then all of a sudden we got a huge onslaught of new industry like influencers and all this stuff. No. That is not what's happening this time. What's happening this time is a complete replacement of everything. Everything will be automated. All entertainment will be automated better, quicker, and faster. All farming is going to be automated. All driving is going to be automated. Everything is going to be automated. Porn, the whole 9 yards. It's all going to be generated. And it's going to be fucking weird. It's going to be really weird, man. So we're going to get rich. I mean, it's going to cause a massive amount of margin expansion for a while, and then it might cause an economic collapse if we don't find a way to either slow it down, government steps in, universal basic income. I don't know. I just don't know. But the tipping point will be when all of a sudden a robot costs less than it hires somebody in a third world. If I can all of a sudden replace Apple's manufacturing facility in China or India, wherever they're trying to move to, with a robot that costs just as much or less, we're fucked. Like, we're in a whole new world. And I don't know if we all come together and we raise the lower half, which we could do now that we don't, because capitalism, fuck feeding the whole world. Well, capitalism doesn't really like that for some reason. So I don't know. It's going to be weird. It's going to be weird. Mars is going to be the bricklayers and boilermakers. That could happen too. Maybe we become spacefaring and all of a sudden, like, everyone's just focused on doing work to get us off this planet and we start colonizing the entire solar system. That's a possibility. Who knows? It's coming if we don't get blown up by something in the meantime. I went with Nvidia, but that's because I've been a customer of theirs for 15 years. What do you mean you went with them? Did I miss something here? In Canada, go with chips. Opinions, Visa, MA. Take a look at the semiconductor ETFs. Yeah, I've taken a look at a lot of them. This is a better approach than 100 Nvidia. For sure. But again, there's going to be a lot of risk. There's going to be a lot of volatility, so just be prepared for that. But I like the semiconductor ETFs if you want that exposure. I feel like it's a bit late to the game personally, but just be cautious and understand things can drop. Be prepared to cost average, all that jazz. Anyways, folks, now that you got me on the path of insanity, I'm going to bid you all a good do tonight. Excited for earnings next week. We'll see if the pivotal growth continues and the market recovers, or if we finally said, hey, we're a little too expensive. We're going to correct. Time will tell. Stay cool. Stay awesome. Peace.